Welcome back. Hope you're having a good morning. Well, as promised, let's get straight to our chat with Leela Palaces Hotels. They've reported a softer second quarter numbers. Some would say it's on expected lines. But to help us out with how the last quarter went by and what's the way ahead, we're joined by Anuraag Bhatnagar, the whole-time director and CEO at Leela Palaces Hotels as well as Resorts. Hi, Anuraag. Good morning. Thanks a lot for joining in. Coming across to you in a minute. For the time being, just highlighting the three broad talking points. The outlook for the second half of the year, international expansion, and further debt reduction. What's the trajectory on that front? Well, Anuraag, thanks for speaking to us here on CNBC-TV18. You've mentioned in the past, right? The second half of the year is typically strong. So what's the targeted occupancy we could be bracing for the second half of the year? And also, are we on track to hit that 100 crore PAT number on a quarterly run rate?
Hey, good morning, and thank you for having me here. Firstly, I'd like to spend some time on what you said earlier, that we had a softer quarter. Well, the RevPAR for the company grew by 13% in second quarter. The EBITDA margin has grown by 17%, and with a blended EBITDA of 48.2%. So, and the PAT, the company has had 4 quarters of positive PAT. So at a run rate, the company is growing 4 quarters of positive PAT. And this growth has come from both growth in occupancy as well as ADR. So at a blended growth of occupancy and ADR, RevPAR has grown by 13%. And just before I come to the balance of the year, let me tell you, as the first half of the year, and you're right, that the second half of the year, which is H2, typically 60-65% of the EBITDA comes from the second half of the year. But in the first half of the year itself, we are trending at an EBITDA margin of 45.5%, which is a 555 bips growth over the same time last year. And our ADR has grown by 10%. So there are a lot of positive tailwinds in this segment that we operate in, on the luxury, the focus pure play luxury segment. Another key point.
Yeah, sorry, just to get the numbers out of the way, margins grew 750 basis points on a quarter-on-quarter basis, right? Some 300 basis points on a year-on-year basis.
So on a quarter-to-quarter basis, the margin has grown to 246 basis points to 42%. But I mean, like you said, look, if you look at the trends, the segment that we are in ultra luxury amenities, experiences, and the offerings that we create, we see a lot of tailwind behind us. And the power of the brand and the experiences that we have created, we see a very robust, high double-digit growth in the balance of the year as well. And for the full year, we look at mid to high teens in terms of ending the FY26 on a high growth.
Could be 15 to 20, between 15 and 20%?
Without ascribing us, yeah, I would say mid to high teens growth in terms of EBITDA. This is our outlook for FY26, looking at the way we are trending in H1 and how we are expecting the second half of the year to unfold.
Anuraag, I get that point. You're sounding quite satisfied with the last quarter's performance. But from a market perspective, I think ye dil mange more because the stock yesterday was down close to around 5%. That aside, that 100 crores per quarterly profit, are we on track to get there?
I would like to say that seems to be right now is a very conservative number, I would say. But if I was to talk about the PAT that we are looking at for financial year 26, I definitely believe that the number that we had outlined earlier is going to be achieved and exceeded.
Okay, so FY26 PAT in excess of 100 crore. I think you've also given an EBITDA guidance of 2,000 crore by FY30. Is that correct?
That's right. That's a 5-year guidance.
5 years, 2,000 crore.
That's right.
And how will you get there?
So that is coming from 4 levers. One is the same store growth, where we see a lot of potential to grow both occupancy and ADR in the hotels that we operate. Second is the pipeline that we have. We are moving from 13 hotels to 22 hotels. We have 9 new hotels coming into our pipeline, out of which 7 are under our ownership. Our key count will move from 3,500 approximate keys to close to over 5,000 keys. All of that put together, plus the new verticals that we have launched in terms of the members-only club, extensions of our brand in luxury residences, our international expansion that you want to talk about, which I can also talk about in a while. We definitely believe we are on track to achieve 2,000 crore EBITDA by FY30.
Okay, and this includes the acquisition. You spoke about the international acquisition. You all, along with your parent Brookfield, have acquired a property in Palm Jumeirah in Dubai. And Leela will own 25%. What do you expect from this particular acquisition, and how will this progress?
This is a great marquee opportunity for Leela. With a 25% of the capital that we are deploying, we're getting 25% equity. This location in Jumeirah, as you would know, it's a beachfront location with 23 acres, over 500 keys, one of the most luxury districts in the world, with a very high, I would say, in terms of propensity for luxury experiences. So A, it's a beachfront location and a great opportunity and a rare opportunity. Secondly, the very attractive investment economics. I mean, at a purchase price, which is like a multiple of last year's for CY25, 12.8 multiple of last year's EBITDA earning, is very accretive, value accretive to Leela, especially because we are planning a very fast capital recycling in over 2 to 3 years, which will come to us from the sale of branded residences. Plus, it will create a cash flow and fee earning for long term for us. So from an investment thesis, it's a very creative opportunity for us.
Difficult, Anuraag, after that sort of a description for us to come back to the studio, but we're going to try to do that. Very quickly, the interest cost has come down as you have guided in the past. Tell us about the debt number and where is that headed?
So our gross debt is close to 1,400 crores right now that we have on our balance sheet. Our net debt is around 400 odd crores. Our gross debt to, our net debt to EBITDA ratio is 0.5x. Our interest cost has come down from 9.1 to 8.4, and the tenure has increased to around 15 odd years. So it definitely increases size and capacity and strength in our balance sheet for our growth.
Thanks, Anuraag, for stopping by, giving us all of those details. You're bracing for better times, going by what you're saying, profitability, EBITDA number as well. Wish you well, have a good day, and we look forward to chatting up with you as the quarter progresses as well.
Thank you so much.